Well, good morning, good afternoon, and of course, good evening, traders from across the globe. Thank you, as always, for tonight, for tuning into my 2628th edition of Short-Term Trading Live with Oscar Carboni, and I am taking a bow for that video last night. Huh? How about that sick call? Listen, number one on the board that we'll discuss. As discussed in last night's video, I showed you three charts. The OMNI, S&P, NASDAQ, Russell, they did find their legs resting on the shoulders of that blue moving average. How about that, right? Who knew? I was so worried I didn't bother putting the OMNIX in. In fact, you know the way our actions, what we do, our actions determine whether or not our account goes up or down. So, Omni was sort of neutral. Market has been coming down. We had that little upswing on Friday in the afternoon. And all of a sudden, for Sunday night trading Monday, I see a setup. Oh my goodness, looks like the market might find its legs. So I don't want to take a bunch of OMNIX and make them test their own money on this, right? So the market comes down to a spot where I've identified and I get long. I tell the OMNIX, listen, we're not going to take the trade. We're going to watch, but I take two lots. Market goes up, I don't know, I'm up $1,700, whatever the number is on two lots. So I figured, let me move my stop up, right? I move my stop up, so I can only lose 5 points. Market comes crashing down. This is the S&P. Comes down today, hits 73 and a quarter, 73.25. My stop was at 73 or whatever. It hit 72.25. My stop was at 73. So it comes all the way down, touches my stop, turns around, and we made new highs for the whole rest of the day. So your actions are what we do, no matter how good the analysis is, what we do is we're responsible for our end result. I had a great trade on. I moved the stop up. The market came and took my stop, even though I was cutting back loss, right? I knocked the loss down from 30-point stop to a 5-point stop. And then it got hit. So the market went up all day. I wasn't in it. But the good thing was it held right there at that blue average. It was wonderful. Now, the Omni is green for trading on Tuesday. I don't know if it's going to hold again, right? But I'm going to follow it up. We're going to get long if we can. Traders, remember how risky this game is. Put your stops in. Even though I got stopped out, I'd much rather have gotten stopped out for a 5-point loss today than to have been in a trade that just keeps going against me until my hair falls out, right? We never want that. So put your stops in, put them in first, and be responsible for your own actions when you trade. Now, let's look at this board. As discussed in last night's video, we might find legs at the moving average. We did find legs at that average, and the Omni is green for trading on Tuesday in both, well, all three, even in the S&P, NASDAQ, and Russ. All right, we'll take a long trade if we can get one. I'll be in my trading room at livewithoscar.com. If we can get a fill, we'll get a fill, and we'll ride it back up. The stop will go in first, and we'll see what happens. Something else on the board, though. We need to keep our eyes peeled on T-bonds, kids. Peeled on T-bonds right now. We got Jackson Hole this week, right? The Jackson Hole meeting. That's when Jerome Powell, is going to go and sit down and have a meeting with all the big top brass. And when he makes his announcements, it will be a lot about the forward guidance of the Fed for the next 6 months, or however they feel like telling us how long they're going to go out for. It's got a huge effect on markets. Keep your eyes on T-bonds. We are at a spot right now. I mentioned this to you about a month or so ago, maybe a little longer. Well, maybe I think I mentioned this to you around November. I don't know. It was back a few months. And I said, look, we're getting at a spot right now that if the Fed doesn't stop, we are going to reach a point where people are going to pour money out of the S&P and throw it in bonds because, let's face it, if you're already, let's say, a family fund with billions of dollars, you don't really need to make more money. You need it to not go down at all. Maybe just stay with inflation, but you don't need to make more, right? You got enough. You don't want it to go down. Well, for the last 10 years, 20 years almost, you had almost no money in putting money in bonds. There was no money in it, so you risked your money in the stock market. Well, bonds now, we're getting to a point that some bond funds can pay you over 6%, 6.5%. Mortgages are costing you 8.5%, 9% practically right now. That means the Fed is giving so much interest that people are going to start taking money out of stocks and putting it into bonds. We are right around that pinnacle, and the chart is going to show you that pinnacle. So what I hope happens is at the Jackson Hole meeting, Powell comes out and says something positive that makes bonds go back up and rates come down a little bit, because I'm telling you right now, we're at a pinnacle spot that if the bonds crack from here, it's going to be a stop run. The bonds are going to go down further, the bond futures, and rates are going to spike. Now, the Fed does not have to raise rates. You know that, right? Powell does not have to say a word for rates to go up. If traders sell the 30-year bond futures down, 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 rates go up, up, up without the Fed doing anything. Now, I'll tell you what we can't have. We cannot have the Fed being the entire market. It cannot hold up the whole market. If a third or half the trades that are going on in the S&P, NASDAQ, Russell, you name it, if half of that money flowed out into bonds, it would be like the Fed being the entire world market. It cannot handle that. No one can. Ask Enron about that. You cannot corner a market. The Fed knows it cannot be holding all the money in the world in bonds, right? So I'll bet you it's going to do something to stop what you're going to see on this chart from happening. Let me show you that, because it's a very important chart. I want to get right to the chart segment. So remember, off the shoulders of that moving average, we have popped, and the OMNI's green. So number 2 on the board, the OMNI's green. So we're going to look for a buy in even the S&P NASDAQ. But you keep your eyes peeled on bonds, because if they go down too far, it gives a lot of reason to come out of that stock market and go into the bond market. And you know what that'll bring. So let's hope that Jackson Hole, they come out of Jackson Hole and save the day. Let me show you that bond chart. Let me remind you of something. Never put your emotions into trading. Never revenge trade. If you lost on a Monday, do not go after that money on Tuesday. Tuesday is just another day where you get up and you trade and hope you make money that day. You do not try to make back Monday's money, right? Monday is yesterday. So that's how you be a professional trader. That's how you behave if you want to be professional. We don't revenge trade. We put our stops in first. And then we say something like this to ourselves when we're in a trade, because it stops us from making crazy decisions. Are you with me? 1, 2, 3. Stops are in. Emotions are out. Rock and roll traders, say that to yourselves. And now let's go look at some charts. Traders, in last night's video, by the time I got to this chart, even the S&P, I said, my goodness, it's an epidemic, kids. Everything is bouncing off of that average. Let's see if it holds. Well, this was Sunday night, the chart for Sunday night for Trading Monday. And that is what happened on Monday. How about that, huh? So it bounced off the average. Now the Omni staying green. Scary, I know, but I'm going to take a long trade. I don't know if you guys are going to follow me. That looks good for now. Bounced off the average. I mean, sure did work here. Let's see what happens. NASDAQ showed you the same thing. I said same here, NASDAQ. And this one, if you ask me, held the best. Watch what happens here. Look at that fantastic hold. Great run back up. Well, maybe it's in gear for another day higher. I'd like to think so. And then you've got the Russell 2000, which not only is holding that average, but it's holding a trend line support as well. So we'll see if we get a nice update out of the Russell on Tuesday. And then check this out. I didn't mention this to you, but Tesla, guess who joined the party of holding the average? Tesla did, right here. Tesla's a big component to the market, right? Especially NASDAQ. And then a little gift for you kids before we talk about bonds. Amazon. Now, if you've followed any of my live webinars I've done over the last couple of months, I've shown people that with Amazon, great tip. Use the 32-bar moving average or the 32-bar algorithm, whatever they're calling it on Wall Street, and you can time Amazon with it. Well, look what just happened here. Just like what happened with the other averages that we were using on the S&P, it held that average right there. And it went up this high, bounced off the average, bounced off the trend line, as it does anytime it gets near that average and or the trend line. So, bounced off of it again. Amazon looks good. Tesla looks good. The stock market, being S&P and NASDAQ, look good. And now we go to bonds. Traders, here's the worry about this bond chart. All the way back here, we were down here, and I was starting to get, I was telling in videos, got to be a little worried. If we can't bounce from here, that means the rate is going to be so high on bonds that it's worth taking money out of the stock market and putting it to bonds. Well, lo and behold, we got saved for a while. It's been up here. But look where we are now. We are right back at that spot, at that pinnacle. Do you know what's under here? Stops like mad. You know why? This was last October, November. This is a weekly chart. You've gone from last October all the way till now without hitting that spot. All the stops in the world are there. There's going to be a seek and destroy mission to go after those stops if there is any speak at all from Jackson Hole that we're raising rates further. When you raise rates, bonds go down. When you lower rates, bonds go up. Bond futures. So if they raise rates, bond futures are going to go down further, and I guarantee you there's stops galore under here. I prefer they don't run them because that jacks up our interest rate and it makes it more appetizing to pull money out of stocks and put them in bonds. Now, I'll get into this in another video, but after a while, the interest rate being high becomes good for the stock market, but not in the beginning like this. More on that in the next video. Traders, thank you for tuning in. I will see you all at livewithoscar.com.